The Bank of Canada is set to reveal its latest interest rate decision tomorrow. So we have to bring in Frank Napolitano from Mortgage Brokers Ottawa to talk about that decision and whether it's going to go up or down. Good morning to you, Frank.
Certainly not up. So,
not up, right?
Yeah, it's a good Halloween. I think nothing scary. Actually, if anything, good news. Feels like Bank of Canada is going to drop prime rate by a quarter percentage point, which is different than what they normally do when we have a robust job report like we did in September.
Positive numbers, good numbers.
Sticky inflation, inflation not coming down as quickly as they want. You would think Bank of Canada is just going to sit on the sidelines, but in reality, they actually see what's going on with Canadian families. They see the rise, the cost of living is so expensive today. And they sense that AI is a disruptor. I mean, artificial intelligence is going to be a job disruptor for sure in the future. So if they look forward, and I think they're making the right decision by looking forward, they're saying we're going to give some interest rate relief. And generally speaking, what their fear of dropping rates too fast is that they create inflation. But I don't think they think that way right now. They think that we need to lower interest rates to help businesses continue to maybe staff their people as opposed to, lower their cost a little bit so that they can maintain their staff and keep things afloat. So
it sounds like they're not looking at the current numbers, they're looking at the future, the Bank of Canada.
They definitely are, because otherwise, based on the job report and based on the fact that inflation's not moving, you would think they would sit still. And 6 months ago, they probably would not move. But just looking forward and seeing we're still fighting the trade war. We're still fighting, the high cost of living. Groceries, groceries are still very expensive. Canadian families are struggling. And then on top of that, you've got mortgage renewals that are coming up in, over the next 12 to 18 months where Canadians are coming off of 1.4, 1.5 historic low interest rates and now having to renew into, mid to high threes and even low fours. So they're looking forward and they're saying Canadians are going to, be hurting a little bit. So let's make sure that we lower these interest rates to assist and keep Canadians in homes. I think that's really important today.
Frank, next week we're going to hear from the Prime Minister with his first budget.
Yes.
What do you think we're going to hear, and what do you think it'll mean for the country?
Well, I think that they have to look at housing, and I'll tell you, I mean, I was here last week with Lauren Vandenberg, the president of Mortgage Professionals Canada. We went to Parliament Hill all day Tuesday, met with MPs, and there was an overwhelming response to helping Canadians on the mortgage front, specifically young Canadians, maybe by enhancing the GST rebate on new homes. But I think they're going to focus on housing. They have to focus on housing and jobs. They really, those are the two pillars of our economy. So I think they have to focus on that. But, we'd like to see amortizations maybe go to 30, 35 years maybe to help young Canadians get into homes. So I think there's lots of ideas out there. We'll see what happens. But I think they will put quite a bit of it towards. I mean, they have to bring investment money in. I mean, that seems to be the priority.
To grow the economy.
To grow the economy. But I think helping Canadians with housing, I think, is important.
Frank Napolitano from Mortgage Brokers Ottawa. Will see the results tomorrow when the Bank of Canada makes its announcement, and it's always a pleasure to speak with you.
Thank you
so much.